What's going on, traders? Andrew O'Connell here with Pristine Capital. It is July 11th of 2022. Welcome to your market recap video. Let's take a look at the markets. Today was a beautiful day and we got a nice little pullback. Let's take a look at our box scores. S&P 500 finished down 1.14%. Our NASDAQ QQQ was down over 2%. IWM small caps also down over 2%. The dogs of the Dow Jones were down just over 0.5%. And our ARK Innovation ETF, this thing got absolutely pummeled today. It was down 6.91%. Take a look at our breadth. We had some negative breadth across the board with only 15% advancers in the small caps. Volatility expanded across the board. And up volume, you can see, was only 17.8%. And my trend model flipped from a +3 all the way down to a -1 into the close. Now let's take a look a little bit under the hood. We'll check out our FinViz heat map. And really the major theme that I'm noticing here is that the semiconductors remain a sector that is pretty weak. And this could have something to do with the inflation concerns. There is a big semiconductor cycle. So maybe some investors are thinking we're coming off the peak of that cycle. Let's sell these semiconductors. And you can see that Tesla was down over 6%, 6.55%. And there was some typical controversy with Elon Musk over whether or not he's going to be buying out Twitter. And take a look at this. Energy stocks were also down across the board, which is fantastic. Here we have our sector map, and we're seeing more of the same. A lot of the strongest sectors off the bottom. And remember, a lot of the leading sectors and leading individual stocks bottomed out in mid-May. So today, like, one of the guys in our group, really funny, he shared Jim Cramer. There was like a soundbite of him saying like, hey, I think the market may have bottomed. And it's pretty hilarious when you think of some of these financial media talking heads, because the S&P 500 were already 5% off the lows. As of yesterday, we were up 6%. A lot of the leading stocks have been moving off their lows for about 2 months now. So it's really interesting. If you're following that financial media, they're pretty much always going to lead you astray, because basically the formula is, if the market goes up, let's say 5%, if they post a bullish article or a bullish soundbite on financial media, that's going to get them the most clicks. People basically want to read about the last thing that happened in the financial markets. Same thing, like, let's say the market goes down by 5%. What's going to get the most clicks? Bearish articles. So pretty much like the financial media is basically backward looking at the market rather than forward looking. But I digress. Sectors, we had the ARK Genomics Fund down almost 5%. ARK, again, got sparked pretty bad today. Real estate was relatively strong, only down 0.19%, as were the consumer staples, down only 0.14%. Materials were also relatively strong, only down 0.27%. But across the board, we did have that weakness. Style factors, same exact deal. Growth stocks were down 1.67%. High beta was down 2.51%. And the small cap value ETF was down 1.7%. And keep in mind, we've had this thesis that, hey, these inflation concerns could be overblown given that inflation could actually be peaking. But also we have to remember that that thesis has been playing out. A lot of the growth stocks, they're 20, 30, 40% off the lows already. The ARK Innovation ETF as well, it's already trading well off the lows. So at this point, with the CPI only 2 sessions away, it's coming out on Wednesday, PPI is coming out on Thursday, it does make sense, hey, maybe some of the savvy investors that were buying some of these assets on the lows, maybe they go, okay, into the print, let's distribute some of this stock, let's take some profits, that way we live to fight another day no matter what happens. So in terms of today's weakness, you never like to see it, but I mean, look at where we are technically. So now we found some support at the 10-day EMA. We're still above the 20-day simple moving average, and we are within a stone's throw away from this 5-day EMA. If you look at any bottoming process, or even just any strong uptrend, it never moves in a straight line. Even the most bullish of market advances always have some red candles in the mix. So yeah, it's very tough to just make a whole trend out of one day. But that said, my trend model did flip to a -1, so really just have to respect either outcome. In terms of the CPI report, I do think we have an edge on that, just given the work that we've been doing on the inflation numbers really for the past month or month and a half. And I do think that that number is going to come in pretty light. You can see here on our hourly chart, we are trading just below the weekly point of control of 38.64. That's going to be a pretty crucial level to watch throughout the rest of the week, so definitely keep an eye on that. Let's move over to our NASDAQ and see how that is doing from a technical perspective. The NASDAQ has been the leader. Check this out. We bounced off of this 50-day simple moving average, and again, we found support of the 10-day EMA, so nothing out of the ordinary whatsoever. Let's take a look at the Russell 2000. Same deal, except the Russell has been sort of a laggard compared to the NASDAQ as well as the S&P 500. Russell 2000 pulled back to the 20-day simple moving average. And let's see these dogs. Our dogs of the Dow basically found support at the 5-day EMA, not too shabby. So yeah, even as you're moving off the lows, these red days, they just have to be taken in stride. Let's check this out. In terms of trades for today, this was actually a trade that everyone in the Pristine Capital trading community, I'd say we all pretty much collaborated on this trade today. So check this out. I entered the XLV August 19th 130 strike calls for $3.85. This is a group that in our Pristine Capital weekend watch list we noted, hey, this healthcare group is very strong, especially the managed care stocks. And then even in pre-market as the session opened, pretty much all of us, it was just clicking for everyone. Like, hey, we're looking for the stocks that are swimming against the trend of market weakness today. Pretty much all the names everyone was putting out were healthcare stocks. So I said, hey, let me just add a little bit of exposure here. I'm already long PRVA, but let me just add some options exposure in the healthcare group as a whole. Sometimes when I see a bunch of names that all look pretty good, it can get a little bit overwhelming where it's like, well, which one do I pick? Do I want to be that guy that picks the wrong one and the whole rest of the group flies? So sometimes it is a little bit easier for me personally just to be like, you know what, I'm going to cover my bases. I'm going to guarantee that I'm not in the best performer, but I'm also going to guarantee that I'm not in the worst performer either. Let me go with XLV. So yeah, took this trade, and we just put here this whole group is looking pretty strong versus an overall weak tape. So yeah, other than that, not really too many trades. Let's take a look here at some stocks that did pull back today. And we did have some leaders that were pulling back. So we'll check out Celsius. This is a name that is really on my radar. And maybe because I've been drinking a bunch of Celsius lately, but who knows. Celsius, we did pull back to the 5-day EMA. This stock has awesome fundamentals. And if we were to somehow get a pullback to either this 10-day EMA, the monthly value rate high, or even the 20-day simple moving average, look how far away we are from that bad boy. Pretty far away. So yeah, if we got some sort of pullback, I would likely try to position in this stock. GLBE, this is one of my core positions. It's actually the largest position that I have on the books. GLBE, did it pull back? Absolutely. But we did find some support at this 10 EMA. And let's actually take a look at the ARK Innovation ETF just to see what kind of damage was done there. Okay, so assessing the damage. Dr. Technical Investor here. Take a look. We had a breakout in ARK above this monthly value where it looked pretty solid, right? It really looked like we could just blast off to the upside. We've had 1 attempt, 2 attempts, 3 attempts, and this was the 4th attempt. And it resulted in another shakeout below the monthly value rate high and below the monthly point of control. But keep in mind, we're still above the 20-day simple moving average and the 10-day EMA. So again, you might look at it and say down 6.91%, that's pretty bad. But when you look at the bigger picture on a swing or position trader's time frame, it's tough to really make too much of this yet. So yeah, heading into the rest of the week, and especially tomorrow, I really think, I just ran a 5K race yesterday. And I think there's so many parallels. I used to be a Division I tennis player. Now I'm starting to get more into competitive running. I'm a competitive trader and investor. And I think between all of these different disciplines, there are common themes. So for instance, what I noticed with trading is same thing with running. If you're running a race, you don't go out and just run at 100% pace, right at the beginning of the race. You really want to pace yourself, maybe run at a 70% clip. And then once you find your opportunity, your body feels good, maybe you're a mile in, maybe you're a mile and a half in, then you start moving a little bit quicker. Maybe you start passing people. Maybe you start surging. But you don't just go out there and put it all on the line in the first inning or whatever you want to call it. I think it's the same with trading where for the most part, most of the time you want to be operating at that 70% pace. And then there are times when you get a big fastball up the middle. And on that, you really have to pounce. But I would say heading into this CPI print, it's going to be out on Wednesday. Am I going to really want to be active at all in the markets tomorrow? Not really. I mean, if the market rallies tomorrow, I'd likely take some targets into the CPI print. But I really just don't think tomorrow's the day to really be like swinging at a bunch of pitches or anything like that. So I'm going to leave you off with that. I think today was definitely a pullback day in the markets, but this is coming off of some nice price action over the past couple of weeks, and we do have the CPI print ahead of us. We also have earnings coming up, and that is beginning on Thursday. Definitely stay tuned for more earnings analysis as well. And once again, I just want to thank everyone for watching these videos. You guys are awesome. Hope everyone has a great night, and I'll see you all tomorrow.